We were very early investors in Solana, not because we're geniuses, but because we were smart enough to give Multicoin some capital. It was one of the best investments we've ever had in our firm's history of 20 years.
Launched in 2020, Solana promised a quantum leap in the development of blockchain technology with unparalleled transaction speeds and a vision of a more scalable and efficient future. The Solana blockchain and its native token, SOL, have seen periods of success and formidable challenges over the past 3 years, from all-time high prices in 2021 to industry-wide disasters in 2022, as they sought to carve out their niche in the digital asset space and mark its place as a rival to Ethereum. However, the volatile nature of cryptocurrency markets quickly took its toll. The 2022 bear market has not been kind to Solana, causing the Solana's token value to fall by more than 90% from its 2021 highs. In particular, the collapse of FTX, a major crypto exchange currency with deep ties to Solana, caused a sharp decline in the value of Solana. The coin lost more than 50% of its value overnight, a stark reminder of the interconnected risks within the crypto ecosystem. This event caused Solana's price to drop below $10 in late 2022, casting doubt on its future. Despite these challenges, Solana has shown resilience. The final quarter of 2023 marked a significant turnaround for the coin, pushing its price above $120 for the first time in years. This resurgence reflects not only market dynamics, but also the underlying strength and improvements within the Solana network. In today's video, we will tell you about Mark Yusko's view on Solana, as he thinks that Solana might give a huge return in 2024. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. There is $30 trillion controlled by big allocation store advisors. If 1% enters Bitcoin through ETFs, that's $300 billion in assets trading around $10 billion a day. This will have a huge impact on prices. This will also solidify Bitcoin's long-term penetration into financial services. But most importantly, it will absorb all the additional supply from mining over the next few years. This year, 2024, more fiat will be converted to Bitcoin than in the previous 15 years, which is not that far-fetched since we have a market capitalization of around $900 billion. But most of that is not money that came in when the price was $10,000, but about $10 billion came through GBTC, and the price soared to almost $60,000. Much of this market cap is just price appreciation from original holders and miners, and much of fiat currency has been converted to Bitcoin since its inception. Perhaps the $300 billion that could arrive over the next year would probably be close. There are many unanswered questions about Solana. It was one of the currencies of the scam. They did bad things and stole money from a lot of people. A lot of people got rich, so it's okay, and some say that's how it works. A concentrated portfolio makes you rich. Diversified portfolios keep you rich. All great wealth has been created from a concentrated portfolio. Concentrated stock market position, real estate position, private businesses, etc. Cryptocurrencies, all of great wealth. From now on, all small fortunes are also created through concentration. How to create a small fortune? Start with a big problem and stay focused. In the end, everything is not over the moon. Think about Cisco in 2000. Today, 24 years later, it's still down 40%. So it didn't work. If you bought it then, it might be Nvidia now. Focus makes you rich, but diversification keeps you rich. You need different elements of growth, security, protection, and high and low risk that are not correlated. So if you think about a traditional portfolio, you'll have stocks, maybe bonds, maybe venture capital, maybe real estate, energy, and commodities. In a digital wallet, you'll have part of the Bitcoin king, part of the Ethereum crown prince, and then you'll have some of the other princes, and you might even fall into some of the esoteric projects. If we can now call ourselves an industry, it is the possession of a token like a commercial sardine, like a representation of a network that only works in a few use cases. Bitcoin, digital gold, Ethereum, giant virtual computers, and a few others if you have them. In the long term, hundreds of billions of dollars will flow into this asset in the form of the baby boomer wrapper, the ETF. And it's just superior for a lot of people. And the sovereign people hate it when someone else says that. This defeats the purpose of being your bank, being sovereign and controlling your destiny, and not giving your money to a bank or broker. But the UI/UX of Bitcoin today is not that good. Someone posted that of the 19 trillion Bitcoins that have been mined, 5 million have been lost or stolen as of now because of password or seed phrase problems, or because they were tainted by bad transactions or something. It's a lot. So people say that owning Bitcoin through an ETF is not the same as owning Bitcoin. Unlike futures, where you don't own Bitcoin, you own paper. Many companies look at what MicroStrategy has done and say we're doing it to a much lesser extent. We have Bitcoins in our fund balance. We manage a Bitcoin fund and place assets from Morgan's Greek balance sheet there. So this will become more and more common. Hedge funds existed. Most of them use futures contracts. They will eventually migrate to this location. Some of them are sophisticated and have already been directly placed. They probably won't change. They have Bitcoin-based accounts, but many other mutual funds, ETFs, and brokerage firms will integrate them. And they are also institutions. If Bank of America and Merrill Lynch change their minds and say they will include this in our model portfolios, it could be included in many products on your platform. Looking into the crystal ball, Solana's trajectory for the year ahead appears optimistic, and there are many opportunities for significant progress. The past year has laid a solid foundation for Solana, laying the foundation for what could be a period of unprecedented growth and innovation. One of the most compelling stories about Solana's rise is its growing dominance in the decentralized finance, DeFi, and non-fungible token (NFT) sectors. Solana's ability to match or even surpass Ethereum in these critical aspects of the blockchain economy indicates a robust and scalable infrastructure capable of handling large transaction volumes, a crucial factor for its continued adoption and growth. The NFT market, in particular, has been a battleground for innovation and competition between different blockchain platforms. Solana's aggressive foray into this space has not gone unnoticed. With its high performance and low transaction costs, Solana offers an attractive platform for NFT activities, positioning it as a serious contender to dominate the market in 2024. Like many emerging blockchain platforms, Solana's success is often viewed through the prism of its comparison to Ethereum, which leads the blockchain smart contract platform category. However, it is crucial to consider the challenges and trade-offs that have accompanied Solana's growth when considering the blockchain trilemma, which refers to the challenge of balancing scalability, security, and decentralization in a blockchain network. It is clear that Solana has sacrificed decentralization for scalability. The investment potential of Solana is the subject of considerable debate within the cryptocurrency community. With its innovative technology and active ecosystem, Solana has attracted the attention of investors looking for the next big opportunity in the blockchain space. That's all for today. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.